Well, we're going to start another chapter, and this chapter is a very nice, interesting chapter. This is accounts for sole traders. It's a calculative chapter, pro forma chapter. You're going to enjoy it. So stay tuned. Most of the work I'm going to do. This chapter is all about, we used to call it income statement and balance sheet, but nowadays we call it SPL, statement of profit and loss. Yep, this one, statement of profit and loss, and SOFP, standard financial position. Yep, SPL is used to known as what? Income statement. And SOP is to be known as balance sheet. Well, don't worry about the balance sheet and income statement. Just focus on SPL and SOFP. That will do the job. This is the BPP world-class course material we are using here. Before starting the chapter, most of the chapter I'm gonna do myself, showing you how you draw the pro forma, because you need to know the pro forma. There's a set layout from IAS 1, International Accounting Standard 1. There's a layout from top to bottom. How do you draw it? I'm gonna draw it. What items goes in it? I'm gonna show you. So stay tuned. Statement of profit and loss, SPL, or income statement. In this is a statement like a paper. In this statement, you record income and expenses only. Okay, people? This is a statement. We record income and expenses only. And a standard financial position is a statement. Again, it's a piece of paper where we record assets, liabilities, capital, then drawings. These items. Okay? So at first we're going to check out SPL, then we're going to check out SOFP. In this BPP book, there are some steps given 1, 2, 3, 4, until 8. Don't worry about it. I'm going to show you the thorough procedure. SPL, or statement of profit and loss, we prepare from a trial balance. Just before starting the lecture, I mean this chapter, I would like to show you the accounting flow. You know, from transaction, when transactions take place, we record these transactions in day books, don't we? Day books or books of original entry or books of prime entry. From day books, we transfer it to the T accounts or ledgers. And from ledgers, we transfer to TB, not the disease, yeah? Trial balance. And then from trial balance, we prepare final accounts or financial statements, or we call it SPL and SOFP. Obviously, there are more items we can make it, but SPL and SOFP. So in your exam, you will be given with a trial balance. This particular chapter is very simple. We'll be given with a trial balance. We need to identify which items goes into SPL and which item goes into SOFP. Just copy and paste and get your full marks. And what did I say regarding SPL? Only income and expenses. These two items goes into the SPL. And SOFP, asset, liability, capital, and drawings. Well, so this is a trial balance given, a long trial balance, very good one. And you meant to do the statement of profit and loss. Before I start this particular question, I'd like to draw a pro forma for you people. You should know the pro forma. Yeah, although the good news in AAT, the pro forma is almost given. You just need to choose the right answers. But many other exams, it is not given. Even for AAT, you need to know the pro forma. So let me show you the pro forma. This is the pro forma. X, Y, Z traders, SPL, statement of profit and loss for the year ended 31st December, could be 2018, could be, or 19. That is the heading, we call it. 2-column pro forma. There could be 3-column. I prefer doing a 2-column. In AAT, it's 2-column. So SPL, I'm going to show you the SPL pro forma. How do you do it? SPL is 2-part, statement of profit and loss. We also call it P&L, profit and loss account. This is 2-part. The first part is until gross profit, we call it trading account. And the other part is until profit for the year, or net profit or loss could be. Just stay focused. We normally start with sales figure. Sales, Any figure we write in the second last column. From the sales, sometimes you need to minus less sales return. We can do it here as well, less sales return. So I'm doing it at the top, sales less sales return. The net sales you write at the end. That's one thing. We can even put some figures, but not here. This is just a pro forma. Yeah, just a pro forma. You remember the pro forma? Rest is nothing much than a copy paste from the trial balance. This is sales. Put it aside. That's our income. Then there is something, one heading, we call it COGS, cost of goods sold. Yeah, another cost of goods sold, 4 or 5 item goes in. Let me write it down for you. We write opening inventory. Opening inventory. Now, what is an opening inventory? The items were unsold last year. We call it closing inventory. If we bring it this year, is known as opening inventory. Plus purchases. Now, from these purchases, there are a couple of adjustments could be there. Minus purchase return. Or could be adding if there is any carriage inward. What is a carriage inward? You know, purchases means goods we are bringing into our organization. That's a part of cost. We bought the goods, and the van on the lorry or the delivery man who brought the items in our organization, we paid them money. That is your carriage inward. That's why purchase and carriage inward is added up together. These are purchase related costs. All these you can write down here. Opening inventory plus purchase, less purchase return, plus carriage inwards. And then less, this is very important, less closing inventory. And yet again, what is a closing inventory? The items which you bought for resale purposes could not sell it at the year end. Unsold items is your closing inventory. That is a reduction in your cost. Closing inventory is a reduction in your cost. Also, this is a current asset into the SOFP. Please do remember these words. I repeat, closing inventory is a reduction in your cost, and this is shown as a current asset in your SOFP, balance sheet. And that's it. That's our until if you work it out, like, and if you can put figures, imaginary figures like opening inventories, any pound, then plus purchase, less purchase return, plus carriage inward. Remember, in your real question, maybe not all the information, like purchase return maybe not given, maybe carriage inward not given, maybe self return not given. Yeah, but obviously you're going to get purchases, opening and closing inventory. These are popular common items. When you work it out, you're going to get total of your cost of goods sold, or call it COGS, or cost of goods, we call it. This should be taken away from your sales. Sales minus cost of goods sold. You get your GP, doctor. Not the doctor. In the United Kingdom, we call GP is the doctor, but it's the gross profit, doesn't it? Yeah, you get gross profit. You know, people, let me take another color pen. Until this, like from this sales, okay, where did it go? Pen. A blue, a green. I've taken a green. Until this, we call it trading. All of it is SPL. This is part one, we call it part one of your SPL, but we call it trading account. Why do you call it trading account? Because we are just buying and selling. We're in a trade, right? We're in a trade. That's your trading account. Well, that's your part one. But do we just deal in trading, like buy the goods and sell the goods? No, there are some more activities that goes on in your organization. What are those activities? There could be some more income, like rent received. You might be receiving little rent. Let's assume you have a shop, and in front of the shop you've given rent out a little space to another shop, so you're getting rent. Commission received, discount received, so many income could be there. Not just that, there could be many expenses like salary, electricity bill, insurance is there, then discount allowed could be there, carriage outwards could be there, depreciation, some different expenses are there. Let's put those in here as well. That is, I call it part two. Okay, I'm taking another color pen here at this moment. That is going to be part, it's going to take all the way down. Part two. Not one, sorry, two. I'm going back to my red color, thickness, a little smaller. Okay, from gross profit, after gross profit, if we have any more income, like add Let's assume add rent received, then could be discount received. Yeah, we just add it at the end column. It could be more income. Less expenses, we call it. Next one, less expenses. Less expenses means what are the expenses, which you're going to write in this middle column, the first column. Could be quite a lot. Wages, electricity. Then telephone expenses, like telephone bill. You have already learned from previous studies, depreciation. If you didn't, we're going to talk about it later on. Depreciation. Even bad debt, nowadays we call it irrecoverable debt, is your expense as well. Any loss on disposal could be. Then a few more, I said carriage outward. This is your carrying cost, but it's selling related carriage cost. Selling and admin cost could be there. So many costs could be. Carriage outward. So all this, quite a lot, yeah, are your expenses. We have our gross profit, look at this. Then we have a couple of more income. So all income, from this all income, we take away all expenses, like all added up, written it here, take away from the income. What do you get? Is known as profit for the year. It could be loss if it is a minus figure, profit for the year. Yeah, that's it. That's your SPL pro forma. So if you remember, you must memorize it. You must know it. And there's a set order. You cannot go beyond the order. Like especially the cost of goods sold is the order. You must start with opening inventory plus purchase, less purchase, return if there is any, plus carriage inwards is there any, minus closing inventory. Then you get cost of goods sold and gross profit. That is the order you need to maintain. There is no order in the less expense. Anything can come up and down. It depends on the question given. You just choose and pick. Yep, neither any order here. But after the gross profit, you need to write the income. Less expenses. Hope it makes sense. We're going to work out with this trial balance. This is an example. It's nothing workout. We just check it out. Yep. Only income and expense is going to go into the SPL. Assets, liabilities, capital, and drawings going to go into the SOFP. I'm going to show you SOFP pro forma as well later on. So let's do the statement of profit and loss, the steps they gave you. In fact, this trial balance has sorted out all the income and expense for you. Mostly it will not be sorted out. The trial balance will be given like this, exactly on the screen now. Like assets, liabilities, income, expenses, all given together. You need to trace out all the expenses and put in your SPL, income statement. SPL, stand for loss. Okay. Let's do it then. What are we given with? Just quickly checking. Carriage inward, outward, closing inventory, depreciation charge, discount allowed, discount received. So this is an income. Yeah. Electricity is given, interest received is an income. Opening inventory also given, purchase, rent, sales, expenses. Okay, we know what to do, don't we? Where's the sales, by the way? We do have a sales is here. Yeah, there we go, the sales. So we've got to start with sales. There's no sales return. Don't worry about it. We have a purchases. Do we have any purchase return? I didn't see any. Yeah, there is a carriage inward, do remember, that goes into COGS. Sales, purchase, opening inventory goes in COGS. And then we have a closing inventory COGS. Then purchases COGS. And sales, obviously, COGS, cost of goods sold. What other item goes into the cost? The first part, trading part. Sales, opening inventory, purchases, carriage inward, and closing inventory. These are the 5 items, people. Yep, in the part 1, trading activities. Let's take those items. Look at this, sales. There's no sales return, so we are not taking it away. This part is not separately told COGS, but at the end they said it, but this is actually COGS, cost of goods sold. Start with opening inventory plus purchases plus carriage inwards, less, this is a minus, less closing inventory 50,000. And when you work it out, you get cost of goods sold 120,000. And how much is the sales? 200,000. Take away 120,000, you're left with 80,000. That's your GP, gross profit. Obviously, you're happy. You are making a very good profit. Not just that, we have seen a couple of incomes, which is interest received, discount received. There could be rent received. Yep. Commission received. So these are income. Let it be there. So 80 plus 5 plus 3, 88,000 is the ultimate profit. Happiness, peace of mind is there. But there are some expenses, less expenses. What are the items? Carriage outwards, depreciation charge, discount allowed, electricity, rent, wages, and that's it. These are your total expenses added up together. 43,000, which is taken away from, like on the calculator, you do like this way. 80,000 is your gross profit, plus 5,000 is interest received, plus 3,000 is your discount received. Total 88. From that, minus 43,000 is the total expenses. 43,000. You get 45,000 is your profit for the year. That's it. Well done. Yep. I think that makes more sense, and you're happy to do work there. Now, just telling you one quick point they mentioned here. Very well done. This profit belongs to the this is a sole trader we are doing. It belongs to the owner. So this is owner's equity. I repeat, this is owner's part of the equity. It is added with the equity. So it goes into the SOFP, standard financial position, means balance sheet, added into the capital section. Yeah, added into the capital. I will show you now in a minute. Now, people, that is your SPL or P&L, we call it, income statement. I think it's time to give you one quick question on SPL. There is statement of financial position as well. I'm taking little consent from you people because all of you are very responsible students. Shall I show you the financial SOFP now and then do all the examples together? Or do you want to do one question on SPL, then I show you standard financial position? What do you want? Tell me. I got some yes answer, but what do you want? Like SOFP now? I'm going to go with that. Or example of SPL now. Which one? Please write me back. It's a democracy. The voters, highest voters win. Okay, let's say whichever. SOFP. Agnieszka says SOFP. Nicolette maybe says PPL means SPL. Then Abdul Rashid says do SFP. Blank vote. Ravi says SFP. Okay, fantastic. SOFP wins. Although I have seen examples, but SOFP wins. Statement of financial position. People, the earlier one was SPL. Now I'm going to do SOFP, statement of financial position. And what did I say regarding that? You record assets, liabilities, capital, drawings only in your statement of financial position. But quickly, I'd like to draw another, I'd like to open another new page of Word page for SOFP. Taking my pen, thickness. Okay, XYZ traders. This is sole trader, yeah? We're doing all sole trader income statement balance sheet, or SPL SOFP. SOFP, the wording is slightly different. We call it as at, but you don't need to be bothered for the 80 students. As at 31st December. The earlier one, I said for the year ended. Look at this. For the, there's the year ended, isn't it? But this one I'm saying as at 31st December 2000, whatever. Okay, thickness, I need to change it. 2018. Yeah, the same. This time it's a 3 column. How many column? 3 column. And the 3 columns are known as cost, accumulated depreciation. We used to call it provision for depreciation, but we call it accumulated depre, and finally we call it carrying amount. 3 column. Carrying amount. And money signs at the bottom. Okay, that applies only for non-current asset. Now, this is yet again 2 parts. Let me show you the first part. And this is the pro forma is really something interesting. You need to pay attention. The set pro forma you need to go over. This is let me write down something. We're going to follow the accounting equation here. Asset equals to capital plus liability. Okay, people? That's what we're going to follow. Asset equals to capital plus liability. Means capital asset. No. Hold on. Although this is the equation, but we're going to follow the other equation here. Like asset minus liability equals to capital. Yeah, this is the UK approach. The other one is the American approach. But nowadays, I have seen in different boards, asset equals to capital plus liability approach is being followed for UK students. But for AAT, asset minus liability equals to capital. That is a very popular approach, and I have learned this way. Over the last 100 years, we have learned this way. Asset minus liability capital. That's your SOFP or balance sheet. That's what I'm going to show you. Just stay focused. Asset minus liability is your capital. Okay. Right. Now, what are the assets? All the assets we're going to jot down. From that, we take away the liabilities. We get net assets. That's what I'm going to do. That's part one. And part two is your capital. Okay. Stay focused. We'll start with non-current asset. That's a heading. You can underline it. Okay, give me 2-3 examples of non-current asset. I'm going to choose 2 only, but give me a few examples. Non-current asset are held in the business for more than 12 months time. And by using the non-current asset, yes, fantastic. We do get benefits, yeah? Okay, quite a good answers are there, but not an inventory. Remember, inventory is a current asset. I'm taking office equipment and motor vehicle or machinery. You have said van, you said then land and building, you said all good, correct answer. I'm taking 2 answers from here. Office equipment and then motor vehicle, land and anything you could, fixtures and fittings. Yeah, motor vehicle. Motor vehicle. Now, 2, there could be more. Obviously, there are more, but for the space purpose, I'm taking only few. Now, you know what? Cost. At first, you write the cost. Could be like any figure. 30,000, 50,000 is the cost. Accumulated debris is a minus. Cost minus accumulated debris, you get net book value or carrying amount. Accumulated depreciation, you know the depreciation which we charge on non-current asset because it gets old or the value goes down here. That's the depreciation. But accumulated debris is the accumulated of all last year's depreciation. Last year debris, year before, and this year's debris. When we accumulate together, that's the accumulated depreciation. When you take it away, you get the worth of the asset at today's value. That is called as carrying amount. So that's it, motor vehicle. Cost less accumulated debris, you get net book value carrying amount. These 2 are double underline, or it doesn't go bottom. There's nothing. The 2 columns are closed. And the 3rd column, we can get total of the non-current asset. That's my non-current asset. Moving on. Current asset. Current assets, these are held for less than 12 months time. These are utilized within 12 months time. Give me a few examples, at least 3-4 examples. Current assets. Fantastic. Inventory. Taken the answer. Closing inventory, which is. Next one, SLCA, fantastic. SLCA means trade receivables. Cash from Coco is fantastic. Good answer. Prepayment of expenses. So very good. Well done. I like your answers. Yeah, prepayment of expenses means we have paid the expenses in advance. Now gonna enjoy the services. Yeah. Yeah, very well done. Let's keep writing all of it. Yeah. You people. And there is no order. Any order, you can write it down. You said cash, I'm taking your answer. It could be bank as well, not a bank overdraft. Yeah, cash or bank. Then you said closing inventory. I do agree with you. Taking the answer. Then you said SLCA means CA means trade receivables. Yeah, trade receivables. Yeah, that's your current asset because you're going to get money in near future. Then prepayment. Very good one. Prepaid expenses. Although in AAT they said prepaid, you need to assume it's a prepaid expenses. That's it. All of it added up together, you get current assets, the total of your current assets. Yeah, you can write in, mostly this is 2 column. If there's 2 column, you write here. If there's a 3 column, you write there. Let's assume it's 2 column. Total of the current asset, let it rest there. As I said, asset minus liability I'm going to do. Now I'm going to do liability. These are your current asset. Now, current liabilities. Current liability. Give me a couple of examples of current liabilities, which you're going to deduct, you know, from the top. Couple of answers. Let's see what is your answer here. Accrued expense, fantastic. Trade payables, fantastic. Accrued expense, yeah. I'm not going to income. Prepaid income could be. How about bank overdraft? Bank overdraft as well could be, isn't it? So trade payables is a very popular answer, which is also called it PLCA, purchase ledger control account. And accrued expense, you are liable to pay those expenses. Yes, these are. Now you people, you see, you have total of your current asset and current liability. So current asset minus current liability, you know what you get is your net current asset. All right, is your net current asset minus these current liabilities, you get net current asset. The presentation could be slightly different, but more or less 95% is the same thing. The concept is same, net current asset. We also call it working capital, but net current asset would do the job. Working capital, net current asset. Now, we have our non-current asset resting here, a couple of non-current assets. We have our net current asset, means current asset minus current liability resting there. Then we need to take away non-current liability if there is any. Give me a couple of example of non-current liabilities. Current liability. Checking your answer. Things are falling down today. I don't know. Okay. Mortgage, loans, fantastic. Well done. Loan, which is more than 12 months time, and mortgage. I'm taking your answer. Good answer, good people. So it could be the mortgage, which obviously happens for 20 years or more than that. Mortgages or loan. When it is a public limited company, it could be more debenture as well. So there could be two, there could be one. I have taken one only. Now, that's our liability. Did you see there are two types of liability? Like this is your current liability, yeah? And this is your non-current liability. And did you see there are two types of asset? Current asset and non-current asset. Look at this. Non-current asset total and net assets, net current asset total. These are all our assets. We're going to add up in a minute. And liability is, we have a non-current liability, which needs to be taken away. So I'm going back to my pen. What I'm going to do is my non-current asset plus net current asset minus non-current liability. I'm going to get the figure is known as net assets. That's my part one of SOFP or balance sheet. Yep. Moving to the part two. Let me highlight part one with the green pen. Part one. Starting from all the way and going bottom. This is part one. Your SOFP is also two-part, part one. And the part two is at the bottom. Very simple, part two. Like this is going to be your part two. We call it capital or financed by. How did you get the money, the business? Financed by or also capital. This is still fine. Capital. What is the capital movement? You know, asset minus liability we have done equals to capital. We got to check it out now. We'll start with opening capital. This will be given. Everything will be given. Capital into the trial balance, and you just copy paste. Oh, you do double underline under net assets. Opening capital plus profit for the year. You know the profit you got from SPL, statement profit and loss, profit. That's what we add here. Less drawings, the money you drawn by the owner. And the amount you get equals to closing capital. Closing capital. This closing capital, everybody, should exactly look like to your, net asset. Your net asset should exactly look like your closing capital. You know, the asset minus liability equals to capital. Asset minus liability is whatever is the figure, which is actually your net asset, should equal to your capital figure. That's it. If you remember this pro forma, you can score 100% in your balance sheet, statement of financial position, SOFP. Okay, with that note, I'm taking you to another example. Then we're going to do some question practice. Yep. State financial position, you're going to record assets, liabilities, non-current asset, non-current liability, current liability. We know it. We have seen it. And, you know, they have given you a trial balance. You know, they extracted the trial balance only the assets and liabilities. But this will not be the case. The trial balance will be a combination of assets, liabilities, income, expense, and everything. Yeah. But anyway, no problem. Our life is easy here. Accruals and prepayments. You should quickly identify which one is your current asset, which one is a current liability, which one is a non-current asset and non-current liability, which one goes into the financed by, isn't it? Yeah. Let me show you those two parts. You know, until net assets, I said one part. This is our part one. This is the example here. This is our part one until net assets, which is this 190,000, and financed by is our part two. Financed by, we also call it capital, which exactly looks like 190,000. Yeah, that means financial state and financial position balanced. You should be happy. How do you do it? From the trial balance, we have done 3 column: cost, accumulated, depreciation, carrying amount. And non-current asset, land and building minus accumulated depreciation, I got carrying amount. Office equipment 70,000 minus 20 accumulated depreciation, I got carrying amount 50,000. Motor vehicle minus accumulated depreciation, I got carrying amount. Now they did the total, which you don't need to, but if you need to just do a total, it doesn't go at the bottom. It's boom, done. The adding up all these things, yeah, 200,000 is a non-current asset. That is more important because you're going to add it up at the bottom. That's a non-current asset. Current assets, closing inventory. This inventory is closing inventory. Trade receivables, prepayments, cash and cash equivalent. Yeah, bank cash, whatever. Add it up together, you get net cash. Oh, 3 column they're falling. Fantastic. Really good one. Yeah, 3 column. Then from this current asset, we're taking away current liability, trade payables, accruals, and bank overdraft could be, but obviously bank and bank overdraft doesn't go side by side in a particular question. Add it up here, take it away from the current asset, written here as a net current asset or working capital. 30,000, yeah. 34,000 is current asset minus 44,000 current liability, you get 30,000 net current asset. But we do have some non-current liability, which is a bank loan, 40,000. Now people, 200,000 plus 30,000 minus 40,000 is your net asset, 190,000. Easy peasy, isn't it? That's your part one, net assets. Part two is financed by, yet again, from the question, where we are taking this information, all this from here, the trial balance, we're just copying and pasting, nothing much, yeah? If land and building 160,000, accumulated depreciation 60,000, let me show you. 160,000 minus 60,000, yeah? That's how you get the answer, don't you? That's how we are copying everything from the trial balance. If you ask me, like I'm just doing little sampling basis, where did you take this prepayment from? 3,000 is a current asset. On the debit side should be, you know, trial balance. Look at this prepayment, trial balance, 3,000, current asset, prepayment of expenses, they're going to take it. If you ask me, where did you take the opening capital from? 107,000 from the trial balance on the credit side should be, yeah, because capital is credit. Look at this, 170,000, capital credit. Just choose and pick. Put it into the right place, get your full marks. Profit 45,000. Where do you get it from? Yes, SPL. Let me take you to the SPL. We do have an SPL from this question. Yeah, that's my SPL, and I have recorded the sent here that it goes into the SOFP. Opening capital plus profit less drawings, 25,000. It goes to closing capital, which exactly looks like your net assets. Any question? And that's it. That's how you do your SOFP. Hope it helps. And on my YouTube channel, I already have plenty of videos regarding that. Yeah, income statement or double entry, how to remember debit, credit. Look at this, debt click is there, Pulse is there. Yeah, how to do trial balances even. Yeah, small trial balance. What is the latest trial balance I have drawn? This is a trial balance. Yeah, so all the relevant knowledge is being shared, so you can check it out.